Here are 6 terms you need to know if you're thinking of buying a home. Buying a home can be a really confusing process. The first time we bought a home, I felt like I had no idea what was going on. And if you want to know more about the home buying process, make sure that you subscribe to the channel so you get more videos like these that'll help you along your way. It's like a whole different vocabulary when you're starting to buy a home, even different than a car loan and things like that. The home loan process is a little bit confusing and a little bit specialized, or really a lot of it specialized. And so there are terms that are going to be floating around that you may not be familiar with. So let's talk about them. This one a lot of people are familiar with, but we'll start out with it. It is down payment. A down payment is typically going to be somewhere between 3.5% and 20% of the purchase price of the home, and that's going to be cash that you're putting down at the very beginning of the purchase to help buy the home. There are some 0% down payment loans out there. If you have high enough credit, a lot of times here in the Houston area, I know of some that are offered at 660, 680 credit and higher. So if you've been working really hard on your credit, that may be an option for you too. So you're gonna wanna talk with your lender. If you need to get connected to a lender, of course, leave me a comment and I can help you out with that. But you're gonna wanna talk with your lender, see what options are available. But you're gonna wanna be expecting to have a down payment, so cash that you're putting down at the beginning of your home purchase, of about 3.5% to 20%. Your second term is closing costs. When we were buying a home, I knew about a down payment. I didn't really know about closing costs. I never bought a home before. How was I supposed to know? Closing costs are the fees that are kind of wrapped into completing a real estate transaction. They're going to be paid on closing day, which is the day that you finalize the deal, get your keys to your new home. They're going to be paid at the title company. They're going to include property taxes. They're going to include insurance. If you're buying down points to get your interest rate lower, that's something you'll talk about with your lender, and that could be due at closing. There are going to be fees that if you're moving into a community with an HOA and you need to pay a title transfer fee or something like that, there are some fees that are going to be wrapped into it. Usually they're around 2 to 7% of your home's purchase price. Okay, so if you're looking at a $200,000 home, typically your closing costs are going to be somewhere between $2,000 and $14,000. That $14,000 is really high. It's probably not going to be that, but I like to give you a range because I know a lot of my buyers like to plan for higher costs so that then they're pleasantly surprised when they're lower. It's better to be over-prepared than under-prepared and not be able to close the deal at the table. Down payment and closing costs are both going to be due on closing day. Down payment is you going ahead and paying for part of the home purchase. Closing costs is going to be the fees and things that are wrapped up into the home real estate transaction. Those don't apply to the home purchase price. The down payment applies to the home purchase price. So, 2 different costs, both due on closing day when you want to get your keys. The third term that we're going to talk about is appraisal. Appraisal protects you and the lender from overpaying for a home. So after you are under contract on a home, after you have had the inspection and you've gone through the option period, you're going to have an appraisal. You don't pick the appraiser. The lender sends the appraiser, and they are going to look at the home. They are going to look at the recent sales of homes that are near in the same neighborhood or in the same area as the home that you're purchasing. And they're going to come up with what they have in their knowledge decided is a appraisal of the home's value, how much the home is worth. When that comes in, the lender is not going to pay more than that. Okay, so there's some different ways we work with the appraisal, and once we're working together, I can kind of explain that to you more as we go along. But the appraisal is basically an evaluation of the home's value, and an appraisal is making sure that the lender and you do not buy the home for more than it is worth. Just because someone lists a home at $215,000 doesn't mean that that home is worth $215,000. The appraisal may come back and it may only be $208,000. Okay, so there are some things to work with, and that's one of the reasons that you want to work with a real estate agent, is because it's our job to help guide you through all of these situations, to put some protections in the contracts for you, to protect you in those kinds of situations from buying a home that's way above what the market value is. It's our job to help kind of spot those before we even get in the situation. So just know that the appraisal is an evaluation of the home's value to make sure that you and the lender don't overpay for a home. The next term we're going to talk about is credit score. A lot of people have heard of a credit score. Maybe you're happy with what your credit score is. Maybe you know you need to do a little bit of work. I know my husband and I needed to do a little work before we bought our home, so no judgment, right? But your credit score is basically a rating on how good you are at paying back money that you borrow. Why does that matter? Well, if a lender is going to let you borrow money, they want to know that you're going to pay it back, right? If your credit score is higher, that makes the loan safer for them. It makes it less risky for them. And a less risky loan may carry a lower interest rate, which means you'll pay a little bit less. If your credit score is kind of on the lower end, you may have trouble getting a loan to start with. You may need to work with a credit repair company or do some research on your own about how to raise that credit score. Okay, so I'm not going to go super into credit score right here, because if you want more information on a credit score, you can get it right here in this video. Your credit score is basically a rating of how good you are at paying back money that you owe, and your lender wants that score to be as high as possible so that they feel confident lending you money. I mean, I don't know about you, but I didn't have $200,000 laying around in savings to buy a home, so I needed a loan. If you don't need a loan, then your credit score doesn't matter as much. You can pay in cash. But if you're going to need a loan, credit score matters. You want it to be as high as possible. We said we were talking 6 terms. Here's term number 5. Term number 5 is mortgage rate. Mortgage rate, or interest rate, is how much interest you're going to be paying on your home loan over the term of the loan. When a lender lends you money, you don't just pay back what you borrowed. You pay back interest. You pay a little more, and that's how mortgage companies make money, right? They're running a business, and they have provided a service in lending you money, so they expect some payment in return in form of a interest rate. Now, the good news is right now, interest rates are practically lower than they've ever been. For comparison, my interest rate with good credit several years ago starts with a 5. Okay, we're looking to refinance soon, don't you worry. But right now, you can get credit scores that start with a 3 and even in the high 2s. That's incredible. That could save, dozens, if not 100 or more on your home payment for the same home every single month. Mortgage rate is simply the interest rate, how much interest you're paying to be able to borrow money on a home loan. The lower, the better. And then last but not least, our 6th term is going to be pre-approval letter. Think of the pre-approval letter as your golden ticket. When you are ready to buy a home, you want to get pre-approved for a loan. The reason why is if you go and you look at homes and you find the one you want to make an offer on, you don't want to wait 3 to 5 days to have to go through the pre-approval process. Serious home buyers who are ready to buy a home in the next 2 to 4 months are going to go ahead and get a pre-approval letter. If you need help getting connected to a lender, just leave me a comment. I'm happy to do that. I know lenders that do 0 down payment loans, 3.5%, lower credit score loans, all the way up to conventional better credit scores, 5 to 20% down payment. There are all kinds of options out there. If you need a lender that's good, for first-time home buyers, or a lender that offers, special incentives for educators, so many options. And it's my job to help recommend you to some of the best options. So you want to go get connected with the lender, and you want to get your golden ticket. That pre-approval letter is a golden ticket that lets you know that you can get pre-approved for a home loan, lets the seller know that you have a lender willing to let you borrow money. So when you go find a home that you love, you put in an offer and you don't put in a pre-approval letter, the seller thinks you're not serious, and the seller wants to work with serious buyers. It says to the seller, we're just window shopping, we might be interested, and it does the seller no good to work with people who might be interested. So if you want to show that you are a serious buyer and you want to really put yourself in competition for the home that you want to purchase, you need to have a pre-approval letter. As a real estate agent, I'm always able to put in offers without one, but I just want to tell you, on the agent side of HAR, where y'all can't see it, most of the time it says submit offer with pre-approval letter. Sellers aren't even interested in seeing offers without pre-approval letters a lot of times, unless you're a cash buyer, in which case they're happy to have you. But most of us are not cash buyers. Most of us need home loans to go ahead and purchase a home. I know that I did. So you're going to want to make sure that you get connected with the lender and you get that pre-approval letter, golden ticket, so that you are on your way to buying a home. I hope something really great happens to you today.